Welcome to the Stock Market Morning Prep video for Wednesday, May 21st. Right across the board, Dow Jones down 137, Nasdaq down 28, S&P down 12, and the Russell down 16 and a half. The Russell and the Nasdaq continue to show signs of breaking down. Actually, they are breaking down. Russell is now below the 200-day moving average, and Nasdaq's not too far behind it. Now, if you recall, back in 2009, we had the same situation where the Russell and the Nasdaq started breaking down, and then a month later, the other indices followed suit. Same thing back in 2000. Not saying that the markets are ready to crash, but I am showing signs that markets are ready for correction. Now, I looked up, did some analysis on the last 10% correction. The last 10% correction was 716 days ago. That is too crazy. And that tells me that we are overdue for one. And I believe that we probably see a little bit more of a 10% correction in my eyes. Now, remember, this is what the analysis is telling me. Analysis can change on a dime. And remember also, whatever I say in the morning could change in the in late afternoon. So make sure you realize that when you are trading, do your own homework, do your own analysis. Make sure that whatever I'm telling you is fitting with your trading plan. Okay. All right. So let's move on. I'm going to show you just a couple of indicators. The indicators haven't changed. So that's why I haven't really been wasting time because the video is so short. But I want to just show you the McClellan oscillator here. And as you can see, this indicator has been basically neutral for all of March, all of April, and all of May. And that's going to change. I do believe that we're going to see continued pressure to the downside. And I do think that this indicator has plenty of room to run before it becomes way oversold. Okay, let's take a look at the VIX. And this is something that you really need to keep an eye on here. We're starting to see a little positive divergence in the stochastics. Not quite on the MACD. I want to see this start to break up. But look what's happening. Bollinger Bands are starting to tighten. And we are at a major support area. So continue to watch what's happening with the VIX, because I do see the VIX starting to break out, and I think it's going to be to the upside to at least challenge the highs here. Okay, and when that happens, obviously, markets are going to start rolling over. Stocks above the 50-day moving average. If you see what's happening here, we're starting to break down below the 50, and we are making lower lows and lower highs on this. So stocks are not moving, and the stocks that are moving, they are breaking below the 50-day moving average. And this is something that we need to pay attention to, because as you can see, once we get below these areas here, we do get some sort of a bounce. But this isn't pretty here, as you can see. This is starting to break down, and something that needs to take note of. NASDAQ, stocks above the 50-day moving average. As you can see, pretty much all of 2013, we were up above the 50 percentile. Now we are below it. Okay, not pretty. Not pretty at all. So this is telling me tech stocks are breaking down. High beta names are breaking down, as we all know already. So just a word of caution here. Last is gold, and then we'll go into the sector charts. Watch, we do have a symmetrical triangle here. I think the bigger picture now, we need to take out 1320 to the upside to alleviate any downside pressure, or we need to take out 1280 to the downside to alleviate any upside pressure. So we're stuck in the middle. Watch for an expansion in gold. I think gold either way can be played, but wait for the breakout. I wouldn't just pick a spot, because this isn't telling me anything. And as you know, the longer-term picture of gold is in a bear market. But if we do get a continued selling and some really quick selling, I think gold will break out to the upside. So just keep that in mind, okay? All right, so now what do we have in the indices? Well, we have tons of bear flags, which is obviously a bearish pattern. We have bear flags in almost every indice except the transports, and that is telling me that I am seeing and looking for some further downside. We also have a holiday week ending on Friday, right? Beginning on Friday to the end of the week. So that also tells me holiday reversals are intact where the markets reverse. So remember, we had Thursday, we had a little bit of a sell-off. We reverted back up. We had a big rally on Friday, and we had a continued rally on Monday. So what does that tell me? I think we have continued weakness going into the end of the week. Remember, it could be choppy, and we also have a lack of volume as we get closer to the end of the week, where we have bigger managers, fund managers, pension funds, hedge funds starting to leave for the weekend to go out to the Hamptons and what have you. So that will also put additional movement, because everything will be exaggerated because of the lack of volume. Okay, so let's get into the charts, and then we'll show you the indices. ES Bear flag, as you can see, still holding below the 1272 extension. If we do decide to break out to the upside, the 1618 will still be the next target. And again, if we do get up there, I will be shorting every rally possible. I think that would be more of a clue that we are totally done to the upside. But until then, let's look for a breakdown below that 50-day moving average. And I would like to see this swing low right here at 1858 get taken out on a closing basis. And if we could take that area out, that's going to be an important pivotal low. Then I think you'll see that next area will be that trend line, upper trend line from the November 2012 lows. Okay, so I do like this, but 1858 in the ES needs to get taken out. Take a look at Dow Jones Industrial Average, bear flag, failed miserably. Now, if you remember, we were making new highs just a few days ago. And look at the markets, 2 days down, 2 days up, and what do we have here? We have distribution days, high selling distribution days. Now, not much as yesterday, but again, bear flag, we broke down miserably. So look for this next pivotal low right up in here if you are trading the Dow Jones, right up in that 16,318. And then if we take that out, then we'll look at the next pivotal low, and then, of course, the 200. But bear flag again, so we have some bearish patterns out here. Now, the transportation sector is the only indice, and it is our leader, holding up relatively well, but it now has a big bearish rising wedge, and it's going to need to break that 20-day, which coincide nicely with that lower trend line. So that 20-day break lower, and if the transports really start to break down, that's just going to solidify that we are now headed lower, and I would say that a local top is in place. I would be safe to say that a top would be in place. But again, with the other two indices breaking down, the Dow Jones really not breaking down, as well as the ES and then the transports, you have to be cautious with the market still to the downside. But you can short relative weakness. And the first thing I like is obviously the retail sector. Retail, JCPenney, Decker Outdoors, Tiffany's, take a look. Costco, another good short sell that I like to get short on any rallies. So there are opportunities out there to short relative weakness to what the market is doing. Okay, take a look at the Qs. As you can see here, nice big bear flag, and this is also a nice rising wedge out of this downtrend channel. So you see this bear flag here. There's a flagpole, and now it's going to need to really take out the 8740 to get down. And this area here that I marked, and I'll just bring this right to, this is the area that we really need to take out to alleviate any upside pressure and continue to move lower. Okay, but again, not looking pretty here in the Qs. And lastly is going to be the IWM, really failing miserably here, below the 200, EMA below the 200, SMA, and now this is the old area here. This low is going to be the important pivotal low to take out 107.48, and then really you have blue sky to the downside, as you can see here. I mean, this is just really open up the door to a massive move lower. And remember, if you don't think fund managers are looking at this, think again. A lot of the big players are looking at what small caps are doing because it's a good gauge of risk on, risk off, right? You feel healthy, markets look healthy, we buy markets, we buy risk because we want to get paid for our purchase, and that's not happening here. Lower lows, lower highs, consolidation, and now break below the 200. This is the first indice to break lower. I think the other ones will follow suit, all in due time. Okay, so guys, use a little caution here. Remember, we're coming into a holiday week where volume tends to get light and moves get to be exaggerated. So don't get whipped around. Wait for entry. Wait until it looks really good, and then start to dig in. We're up a little bit in the ES, up 6 handles, but I don't think that should be sustained. Now remember, guys, anything can happen, so just remember that. And again, when in doubt, cash is a position. Have a great day. We'll speak to you tomorrow. Take care.